Good afternoon, everyone. Pretty much coming to the end of the month, and you can really tell that the big players are starting to leave the market right now, as the school summer holidays are starting, and the volume tends to has been drying down a lot. I could just sort of, especially in fixed income, can tell. Like if we just look at over here at a few things, like if you look at the Bund's has done a decent amount today, but I mean just generally it's been quite low. Today it's done 900,000, but lately it's been only doing 500,000-600,000 volume, which is pretty low. And so I mean now we're coming up to August, which is historically the deadest month, especially for my trading anyway, and I've been trading for about 5 years now, so so it's pretty much whatever you can get, you can get. Today it's been a bit of a mixed day. Had a decent start, got off a couple of good spreads, and then pretty much gave half of it back, just getting chopped up in rubbish really. And that's the problem sometimes with these markets. It's because there ain't as many clear opportunities. You feel like you have to do something for the day, and you end up just taking out opportunities which ain't really there, and then so that means the probabilities ain't really in your favour, and hence not really helping you with your trade, and then making you lose money. Now just looking at this Bund, and it's been a very volatile it's been quite crazy. This has just been over just a 60-minute chart, and we've seen this before, but I mean we've had a 400 tick range. We've had a 400 tick move to the upside, then pretty much another 400 tick retracement, and now we've come back up another 300 ticks. And what did I say to you last week? I think last week we were down here somewhere in the 127 region, 127 and a bit, and I just said I don't think this is something that's going to last, and next lo and behold, it's come back way up what it was at the start of the previous week. So it's 300 ticks up. And it's pretty much you could just tell that it was a sort of forced rally, this Euro bailout. There's no such thing as a bailout. Nothing's going to get bailout. Greece in a lot of trouble, Europe in a lot of trouble. It's just basically prolonging the inevitable, in my opinion. Well, we look at this Bund, and from this move, this big 400 tick move up that we had earlier, these Fibonacci levels are actually proven to have quite a bit of significance. This 50% retracement, it was a nice bounce over here, and it's sort of forming some type of level around here, as we see that we had some price consolidation around here before we broke lower. Had some price consolidation roughly around here as well before it broke higher, and it seems to be trading in these ranges pretty well. And so I mean, just looking at that, these levels, we're back up here. So I guess looking at the Bund now, the next level is back to 130.91, which is pretty much it'll be a tough. Well, I don't really see it happening anytime soon, but you never know. Could be getting there sooner than we thought. But we're in a nice little upward channel here. We've sort of bounced off this top of the channel at 87, come off 50 ticks, and now we're at 45, so could be a good buy around here. Stops just below, maybe 10 ticks below this band. So I mean, so it looks like we're in a nice upward channel, and then if we do significantly break this, then I'll be looking to go short, but be wary about this level over here, 86, which is 38% retracement. So this could form some type of support over here if it did break. But right now, might keep to the range, I guess, this upward channel. So I'll probably be looking to go long around here, but you've got a high probability play here, at least a 2-to-1 trade, because if we stop out, pretty much I'll be risking double the profit as the loss that I'll be willing to put around here. And if we look at the Schatz as well, pretty similar type of picture really, as you would expect. There was the big move up, bounced off this 50% line, and that is forming a pretty significant level, the 108.14 we at 108.14.5. We sort of consolidated around here and around here, sort of dropped low, and this is where we were last week before coming up higher again. And now we're sort of meandering around this 38.2 level over here, 108.274. I guess the next level we look at over here is the 108.43.5, so that is potentially where we can go next. Again, we're in a upwards trend, and I guess this is pretty much looking to be a double long, because if we put a trend line here, as you can see, it's the uptrend, and it's also coinciding with this 38.2 level. So here looks like a double buy really, if we bounce, could pretty much go up to 36s, top of this range over here, even up to 43.5, which is the next level. But again, looking at both scenarios, if we break, should be a pretty relatively tight stop, because if we break this range and this level, we're wrong, and the trade don't work out. And again, it's a low risk trade, so even if we do get stopped out, it shouldn't be stopped. We shouldn't have a stop more than what we'll be willing to take the profit on this particular trade. Looking at another thing as well right now, just looking at the Ftse chart, and it's been pretty sideways. Looking at this one, it's on a MetaTrader platform, and we look at this Ftse chart over here, and we've seen there's been a lot of sideward movement over the last. If we look at the 1 hour chart over here, you see these levels are all holding really, really well, like the 5860.2. That level held back 12th of July region, so that's about two and a half weeks ago, was when we were in a nice range between 60 and 15, 45 tick range. We were in that range for a few days before we broke out, and now this 60 is now basically was a support level for a good week before we broke that, and now we're testing this bottom of the bigger range that we had over here. We bounced quite nicely off it, and now we're sort of in the middle of this initial range we had from the 12th, 13th, 14th, 15th of July time. So I mean, I think a good short could be 58.60. This is where I'll be looking to short, but again, tight stop if it goes above, because I mean, looking at the history over this last month, there hasn't been too many false spikes out, so I would have my stop relatively tight, and if it does break out, then we're wrong, and wait for the next opportunity. So the Ftse has been, technically it's been pretty good to trade. Obviously it looks great in hindsight, but when we try to trade it on the actual day, it's much more difficult. But I mean, looking in hindsight, actually looks pretty good. So it looks pretty good over there. Going to the spreads, well, that hasn't been easy to follow, let's put it this way. It's been all over the block really. Been coming off hard, although I suspect we have rallied, which we have. If we look at this Euribor Septec spread, we're trading 7s now. It wasn't that long ago where we were trading 11s. In fact, it was actually last week we were trading 11s, as you can see, and we've come off 4 fat ticks, trading as many 7s as you want this morning. In fact, I actually went long 7s this morning, and that's pretty much, I went long a decent amount and took my half there, and that's what sort of counted for my good start. But then afterwards I gave it back in the Ftse, getting chopped up, even though in hindsight when we saw it was quite good. But it's a pretty significant move, 4 tick lower, and it hasn't been easy to trade this spread. In fact, yesterday was very difficult, and today, luckily, just pretty much done nothing, just been in this half tick range. So, as long as you're buying these 7s, then you'll be pretty much okay. But we've been come off quite a lot over there, and but one spread that has been good, that has been treating me well this week, is this June 13 Sep 13 spread. And if we look at that, can't get a chart of that, so let's go to this March 13, June 13. we look at this spread, this one again is a bit like the previous one. We traded 12s, 12.5s last week, but this week basically last week's support is now resistance, and short in 12s, 11.5s has been the trade, and we've actually come off and we've actually been to 10s, 9.5s. Even though I can't get the June 13 set 13 spread up, but that one's been between 12 and 13.5 pretty much the whole week, so it's been pretty nice, give you the opportunity to get in, you know, although the volume hasn't been there, so you know, you just got to get lucky really, and hopefully you can get in. But I mean, with all of these spreads though, you know, by averaging you seem to be okay, apart from that front month, but you know, as long as you've been averaging and being pretty disciplined, average, and being willing to scratch the spread, it's not been much harm done. And I'll have a last look at the TED spread right now, and yeah, that spread has been, well, it's not been for the faint-hearted, let's put it that way. TED spread just been a mirror of the Bund really, well, the opposite, shall I say. In fact, if I actually put this TED here and actually chart the Bund as well, let's do 60 minute, you'll see the massive correlation between the spread, well, especially recently. This was the move down last week, as we see, and this was the move up in the TED spread. So if we just draw this trend line here, and last week we were trading back at 48s, but as the Bund has gone back up, oh sorry, that's the Schatz, but anyway, as the Schatz has gone back up, we have come back down in the TED spread, and we have actually come off from the highs, a good 15 fat ticks in that TED spread. So it's been in quite a bit of a downtrend, but again, you know what this TED spread is, credit spread as well as a yield curve spread. So whenever there's economic worries or any talk of default, and this week has been about the states, whether they're going to pass their budget, you know, whether they're going to raise their debt ceiling in time or not, that again basically causes people to sell the Euribor relative to the Schatz, and people tend to will pile into the government debt and sell off the corporate debt, which is a Euribor, and that's why we've been coming off over the last week. So again, this TED spread's been a bit difficult to trade, and to be honest, I haven't really been trading that at all. I don't really like trading the TED while there is economic tensions in terms of, you know, sovereignty of a country, whether they can actually survive or not, and because that's the basis for maintaining the TED in a good range, is the credit quality of the actual trade and the actual country. So if Eurozone countries having credit issues, then the TED is definitely not a good trade to spread, especially if you're looking for the mean reversion side of things. Anyway, I think we'll call it a wrap for that for the week, and good luck for your trading next week, where we're going to have all the data out and everything, which should be good. Alright, take care.